Hello, everyone. So here I am again. This is the fourth video to my five-part series on the different types of life insurances. So in this video, I want to go over the IUL. IUL is the Index Universal Life Insurance. So with the Index Universal Life Insurance, the premiums is they have flexible options, again the same as a universal life. The IUL is again is a permanent, or well, as people say, a whole life insurance policy, a permanent life insurance policy where you can build cash value. So the premium, you have flexible options. So again, if you somehow sometime in the future you come into a hard time, you have to pay the bare minimum for your policy. The payment period is for a specified period of time. So after that specified period of time, it could be 30, 60 years whatsoever. You don't have to pay anymore, but your policy will be still in force. The Index Universal Life, it has cash value. The cash value varies with the interest caps and floors determined by the insurance company. So they have a cap, meaning the maximum interest rate that you're going to get on your cash value, the money that you put in the savings bucket, what I call in this policy. And then it has a floor. The floor with this policy means that you would never have to worry about losing any money in this policy. So the floor can be 0%. The floor can sometimes change to 3%. That's a guaranteed 3% of interest in your account. Most of the time, the floor is 0%. You're not going to be losing any money. You may not be gaining any money in that year, but most importantly, you're not going to be losing any money. With the death benefit in the Index Universal Life, it can vary depending on what the policyholder decides they want to do with it. The death benefit, you could use it as a living benefit, as we put on for long-term care, or you could just have it. It's however you decide you want the death benefit to be. It can just go down to your heirs, your beneficiaries. It's your decision. So when we setting up the policy, you'll decide what you want to do with your death benefit. So the purpose of the Index Universal Life is protection for life with a potential for higher rates of return than a traditional whole life insurance or a universal life insurance. So the money that you put in this account, you will gain more interest, making your money work for you more in this account than a whole life and a universal life. Also, with the cash value in this policy, you need an end game. The policyholder should also know their intended use for the cash value. For instance, the cash value, you can also use it for retirement planning. So your policy can be restructured for you to have disbursements, a paycheck coming out your account each month. And on top of that, your money's still going to be gaining interest for whatever's left. So the Index Universal Life Insurance is one of my flagship products, which I will be making a video going in more details, because if you don't know about it or you don't have anyone to explain this to you, you're not going to know what this policy can do for you. But the Index Universal Life is one of my flagship products. So the pros and cons of the Index Universal Life Insurance. The advantages: lifetime insurance protection, premium and death benefit is flexible, which I went over. Cash value growth has the potential to earn a higher interest rate other than having your money just sitting in the bank. When the market is up, higher interest rates. When the market is down, your money is not at risk to be lost at all whatsoever. Disadvantages of this policy. The required premiums may increase as the insured gets older in order to maintain needed insurance protection. So, with this policy, if you keep on paying the bare minimum, This policy is not created for that. This policy is to help you actually to grow cash value and also have a death benefit. So in case that you need long-term care or you need to use your money, you will already have that money inside of your account, in which any withdrawals out of this account is tax free. So that's the only disadvantage, is that when you get older, you may need, if you're not maxing out the amount of money that can be put in it in a year, then you may need to have your required premiums may be increased. Also, a disadvantage of this policy: cash value growth may be disappointing during a downturn in the equity markets. So if the market is down, your interest rate may be low. But most importantly, you're not losing any money. So that's the IUL, the pros and cons. If you want to know more or you have any questions about this policy, DM me, text message me, 410-908-7865. Email me, CorettaMontague@gmail.com. My information is everywhere, and I would love to help you. See y'all in the next video. Bye.